Welcome back. Well, let's get talking to another company now. Newgen Software is the next management on the show. The revenue and EBITDA have come in quite strong. To discuss this, we have with us Virender Jeet, who's the CEO of the company, joining in. Virender, thank you very much for taking the time out. Well, Q1 is generally typically the weakest quarter for a company such as yours. So revenue growth has been strong at around 25% year on year. Can you tell us what were the key drivers?
Good afternoon, Ekta, and thank you for having me on your channel. As you're right, Q1 is a lean quarter for us. But having said that, we have been growing continuously for last 8 quarters, Y on Y, at above 25%. And I think in that it has been in line to that growth. So there's no surprise from us in terms of we did expect to grow. And in fact, our expectation was to slightly have a better quarter than this. The growth is coming from our core traditional markets. We are very strong in India, Middle East, and APAC. And US is typically a market where we still are establishing. So financial services have been a great customer. Again, the wins in that sector have been great. We got a broad-based growth. I think we got wins in Middle East, we got wins in India, we got wins in our Southeast Asia market. And also we did a good amount of, kind of a penetration in US market. We had a large deal in banking out there as well. So it has been a broad-based growth. It's a continued story. We have been on a run for last 8 to 10 quarters with a high growth rate, and I think we will try to continue that momentum going forward.
All right, fairly optimistic. You will try to continue that momentum at 25%. You said that you thought that you could have done better. So let's pin you down to that itself. What exactly is what you're expecting for the entire year in terms of revenue growth? And if you could break that down, you said, India, APAC, EMEA, and US are the core geographies. I remember the last time you said that you are looking to increase your exposure in the US itself. So if you could give us a sense of the revenue growth for this year that you're gunning for, and in that, break that down across all geographies.
See, as I said, that I think we would like to keep the historical momentum going, and I don't see any challenges in the business as of right now. Our traditional markets, as I said, continue to grow. They continue to show strong momentum. India and Middle East are going to be the leading growth drivers. I think if you look at last year also, we have almost grown between 35 to 40% in these two geos. We do expect them to grow at a high growth rate. To be exact on numbers, it's very difficult. We still are a company with a small base of revenue. We just covered around 1,100, 1,200 crores last year. So I think single deals in quarters do vary in terms of numbers. So it's still advised to look at this company at a more annual basis in terms of revenue. Having said that, as you rightly said, I think India, Middle East, and APAC will continue to grow. US, we are very optimistic. A lot of our investments in terms of our core marketing, as well as our building sales and our support structures, is happening in US. We recently pivoted our strategy to go to really larger accounts in US rather than smaller accounts. And so it's taking a bit of time. But having said that, as I rightly said, we did have wins in Q1, and we do expect that in Q2, Q3, we'll continue to have the wins out there.
Okay. So when you talk about maybe a quarterly run rate in terms of the US, can you just provide us a sense in terms of what it might be? You did around 70 odd crores in terms of revenue this quarter. Would that be a run rate that we can assume will continue for the next couple of quarters for the US, considering that you are more, there's a more promising deal win?
No, I think it will expand because quarterly our revenue does expand because, as I said, it's slightly lopsided revenue, Q1, Q2 being leaner quarters. So we do expect it to, not only we expect it to, increase because of the lopsidedness, but also we expect growth out there. We always, at least at the beginning of the year, we are gunning more than 20% growth in US as well. Where we exactly hit, I think that may be, some amount of time before we discover that. But we are very optimistic by Q3, Q4, we should be able to expand our US sales, and we should be able to really bring it as one of the growth territories as India and Middle East. Before the results come, we'll have to wait for that results. But we are quite optimistic.
Let me just rephrase that. 70.5 crores. The maximum you did was around 75 crores in Q4 of FY23 in the past couple of quarters. And the lowest has been around 62.4 crores. So give us an average run rate that we can expect. Are you now comfortably above 70 crores per quarter?
Yeah. So what happens is, a large part of our business is typically annuity and more subscription based. So roughly around 70-80% of business is more predictable at the beginning of the year. So this kind of a momentum of 70 crores can continue. And, even if we don't have any wins for the year, but we don't expect that. We do expect that this to expand over the year. for the remaining quarters of the year.
All right. What about your order book? What is the current order book that you're standing on? You said that there are a bunch of deal wins that you've seen in the first quarter. You're hopeful of some more. So what does your order book currently stand at? What do you anticipate it to be, over the next couple of quarters?
Yeah, so actually I don't have exact numbers of order book because our business is typically, around, for next year's growth, almost 90% of the revenue comes from existing clients. And a lot of that is around renewals of order book. So order book is not the right reflection. But having said that, last year at the end of the year, I think we had roughly around 20% growth in the order book size on an annual basis. On quarterly, I'm not sure about the numbers, but we could share that.
Yes.
We are there. But order books, because the business is a bit lumpy on the license deal. So finally, the Q3, Q4 license revenue will determine the larger growth numbers for the company. And that is how we expect, this year to also perform that.
All right, so let's wrap it up then with your margin profile. First quarter, again, typically on the lowest side, then you see big acceleration as we move towards the end of this year. This year, on a year-on-year basis, there has been about 300 basis points improvement. What are you gunning for the entire year?
As I said that, previously, we are a high gross margin business. A large part of our revenue has got no direct costs. It's around we are at 65 to 68% gross margin business. We do spend a lot on our R&D and sales and marketing. But as a healthy practice, we always gun to have roughly around 20% of net margin and 23% of EBITDA margin. Beyond this, any expansion, we would like to invest in growth. Having said that, in a shorter period of time, if our revenue really shoots up, we cannot really reinvest that in the same year. So, but we would always tend to be around those numbers, but on a particular quarter or a year, it could expand. But the intent is to really push for growth and still expand our growth.
Okay. All right. Well, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's the management of Newgen, but we